Hello everyone. As Muthu introduced me, I'm Vineet Gupta. I'm the Chief Product Officer and Chief Technology Officer at Just Impact. And I've spent last around 15 years in the intersection of AI, machine learning, and data with companies like Meta on their AI products, Adobe, Adidas, etc., and have extensively published and patented in this field. Um, Recently also published a book called Mathematics Behind AI and Machine Learning, which actually goes down into the foundations of how artificial intelligence builds up. Um, I'm joined here with Anushriya Jain, who's a senior associate in product management team for geospatial and AI products at Just Impact. And today we want to talk about one of the biggest blind spots in the global finance space and how geospatial AI is actually changing the way which we see and manage risk. Global assets under management exceed $120 trillion of management, and every single day over $7.5 trillion move across different markets. And yet, the irony is that we can track a $10 food delivery in real time, but we can't track whether a 50 million factory is sitting in a flood zone or not. And this is not just ironic, actually, it's dangerous because environmental invisibility is a material profit and loss risk. And as you can see from the numbers here, around 250 billion of economic losses have happened due to disasters in 2023, and that has been published by Munich Re. Similarly, over 50% of our global GDP, which is around 58 trillion, is actually nature exposed, which means location intelligence is fundamental, and it's like a new ledger that we need to cater to. Now, there's one more interesting paradox here that companies can show strong revenues and companies can show healthy profits, but all of that can hide behind deep vulnerabilities. And you know, if you see here, think about the floods that shut down Mercedes and Jaguar production plants, which caused margin collapse, or droughts that cut agriculture outputs in England, which resulted in lost outputs, or even wildfires, right, which you would have heard about last year in California and LA, which threatened semiconductor production and data centers, which caused systematic disruptions. Now, you can see from here that profits can definitely hide vulnerabilities, and true resilience actually requires seeing where these risks actually live. And these cases, which you see, remind us that even profitable companies are fragile if they lack visibility into where the risks actually lie. And one more thing I'll add here is that CFO dashboards might look fine, right? Until one fine day when an event occurs and it wipes out supply chain and causes the crash that we are talking about. So that's why revenue is not, or profitability doesn't always translate to resilience, and building resilience is really really critical. But the point is, why today we can't see, or it is kind of underutilized on where these risks reside. And this is what we call as data chaos, right? That's the real blocker. It's not just about data scarcity, it's the overall chaos that these four things, which I'm going to talk about soon, bring in. The first one is opaque and fragmentation of data itself, right? Most companies, or most commercial data in that sense, is opaque and fragmented. And this is because assets and supply chain locations are rarely disclosed, right? And hence investors are left with a black box of scattered data, outdated spreadsheets, and data which they need to use to make those $1 trillion investment decisions, right? Second important aspect here is a deficiency or deficit of trust, which you see here. And we'll talk about this in detail in the later part of the presentation. But the point here is we oftentimes, mislocated, misclassified data and assets or geospatial data almost north of 30% in many of the data sets in the market, right? And without this quality data or verified ground truth, a coal mine can appear to be an office building, and you don't know whether you're making right decisions or not, right? So that's the second aspect. The third aspect is the translation gap itself, right? Geospatial data doesn't directly translate to a financial metric, which we were talking about in the previous slide. A flood layer or a biodiversity map doesn't automatically become a cash flow, right? It doesn't automatically become a probability of default or value at risk. The challenge here is that the finance, ESG, geospatial teams, they do sit in silos with no common standards which tie these signals together, and oftentimes they die in these handoffs. And the last challenge here is scale of the data itself, and geospatial data, as you all might be aware, is huge, versus readiness of companies. There are millions of assets to monitor, millions of types of hazards and changes which happen every day, every week, and to couple that, regulations is moving faster than ever. Yeah, and that creates a bottleneck in terms of how fast operating teams can move. Manual checks won't scale. Quarterly reporting won't cope up with the kind of need here, and there is where the opportunity lies of using AI and geospatial data together. So the key takeaway is we need to fix these foundations of verifying locations, standardizing the data pipeline, and then translate these geospatial geospatial risks into financial terms so that actions can be taken. And that's the pivot that today I'm going to talk about. One more thing I'll interestingly point to is why now? Why not tomorrow, a year later, or 5 years back? This moment is different, right? It is becoming more, and geospatial AI is not just interesting and evolving with AI, but it is becoming critical to business success and actually competitive differentiations in the market, right? And that comes with a storm, or perfect storm, which I call it, of four forces here. The first one is Geo AI revolution itself. We can finally fuse satellite imagery, hazard models, biodiversity maps, supply chain data, and turn these pixels that you have into actual portfolio signals. And AI is supplementing that with computer vision, becoming more and more advanced with transformer architectures, or LLMs maturing and providing explainability and understanding in a much easier way. And we now have increased coverage around land use and water stress, all of those geospatial signals which are critical for decision making. Second thing is the climate urgency itself. Impacts are arriving at much faster pace than expected, right? Floods and wildfires and droughts, these are no longer extreme events. These are actually, sometimes happen every week. So these are new baselines, and they are hitting supply chains as we speak. Insurance models, GDP exposure, as we talked about, right? The third key thing is the regulatory tsunami itself. As I talked about earlier, the location is becoming the new ledger, and regulations are or policies and governments are identifying that. And we are moving from guidances to more obligations, whether you touch upon the Basel Committee's recommendations, which are being adopted by a lot of central banks, or TCFD, TNFD, CSRD regulations. All of these require location-based disclosures. Yeah. Um, and location is becoming the new ledger, where investment decisions must account for where the assets actually sit and what exposures they do face. And finally, I'll mention the fourth aspect of the perfect storm, which is the market adoption and how Geo AI is driving competitive intelligence. Early movers, which we see in the market like NBIM, and we'll talk about them, or BlackRock, are already using location-aware intelligence to make investment decisions and getting a competitive edge in the market, right? Compliance is the baseline, what I'm saying. The real opportunity actually lies in using geospatial AI as a competitive intelligence mechanism, because better visibility becomes the new alpha for your investments. And if you put all of these together, climate urgency, maturity of AI and geospatial regulation and adoption, you have that paradigm shift. And the question now becomes that it's not about whether geospatial AI will reshape finance. It's basically how do we solve it and leverage it for the best possible use cases. Now I'm going to talk about how Just Impact is doing that by creating the order from the chaos and creating what we call as GeoAI operating system to make this happen actually. So we built the GeoAI operating system to turn turn the fragmented data, which we talked about earlier, into decision ready intelligence. And actually, that needs four components of the stack to work together. Just like you have operating system in a computer, which talks with data and your memory and your compute. AI or GeoAI operating system needs to couple these four aspects around data, AI engine, geospatial stack or scientific methodologies, and the action platform together. It starts with the verified data foundations, because if you don't have this, everything else is like building on a quicksand, which can collapse. So traceable inputs like ESG filings, supply chain data, geospatial data, satellite imagery is really critical here, and verified, and we'll talk about that in a bit. On top of this layer of verified data foundation sits the AI engine, which actually acts on top of it to make decision making possible. Computer vision or language models, which bring explainable AI, which not only read assets but verify them and forecast future scenarios, are the components which sit here in the second row here. The third row here is the geospatial stack itself, which are layers around climate risk or biodiversity or deforestation, which you see here, and so on, uh, which bring this data and turn it into actionable insights and decision making systems, which bring me to the last layer, which is the action platform that delivers this intelligence to people and businesses who need it the most. Businesses can avoid supply chain shocks, and investors can optimize their portfolio, and policymakers can make smarter regulations and decisions. And the outcome is simple here, which is GeoAI makes hidden risks measurable and actionable if done correctly. Now, I'll take 30 seconds here to introduce Just Impact itself. Uh, and this is critical at this point of time, because next I'll be showcasing, and Anushriya would be helping me there in showing you how there are applications and use cases where investors and corporates are using just Geo AI to make you know massive decisions and moving forward. So, Just Impact um, is our advantage is simple. We integrate the four risk and impact domains around nature and biodiversity, climate risk, social impact, and regulations and standards together with these three cross-cutting strengths around advanced AI, data foundations, geospatial intelligence, and coupled with the scientific rigor and regulatory alignment, uh, to deliver what we call as 360-degree impact intelligence, which actually, in a sense, make these hidden risks visible, measurable, and actionable. And that is why, and you see a couple of logos here, but this is not the entire list, right? This huge list available behind this. Leading investors and companies trust us and choose us, not for just another ESG score, right? But for actually intelligence they can use and make decisions upon and actually gain on their decisions. Now, with this, I'll pivot into how we are leveraging what we saw in the previous slide around GeoA operating system in actually taking real life decisions and actions. Let me start, on the foundation side first. And this is a very, it's a very interesting tale that I usually tell. I call it a cautionary tale, right? Um, Investors, make trillions of dollars of investment decisions based on asset data, right? On where the assets and locations of different companies are. Um, but the point is, this trillion of dollars of investment decision that is taken on the data, which is oftentimes misclassified, outdated in nature, and so on. And one example here is um, a leading asset location data set listed this particular site as a coal mine, and investors relied on this to make decisions, right? But when we checked, when we were building our GeoAI model, the reality was that this was an office building in downtown America, where ground floor was actually a Starbucks, and this was building on top. And you can imagine that this is not a coal mining site, right? And this is not an isolated instance or use case. Our analysis showed that over 30% of asset data is systematically wrong. Either it's outdated, misclassified, or simply misplaced in nature. And here is the problem: when the map is wrong, which was our bottommost layer in the operating system, which is the verified data foundations, every other thing you build on top, the models fail, risk models fail, valuations fail. Every investment decisions that is built on top of this data can collapse, right? We needed to correct this, and there is where I'll jump to the next slide, where which I call as fixing the map on what the mine is actually is. So here, how do we fix it basically? And here is where we use the GeoAI OS, which absolutely shines here. And we take raw coordinates of the locations, run them through computer vision and geospatial overlays, models that we have, and extract the features which are differentiating in nature and can identify what actual asset this is. And couple it with explainability tools like you see here on the right side, GradCam. Um, and the result is what you actually see. The mine was classified with 99.5% confidence. This is an actual mine site with explanations on why, what features are driving towards it. In short, we are now able to track um, over 3 million assets globally using this method. And it's, as you might imagine, it's not just about volume of assets, it's actually of the quality of asset which can make investment decisions correct. And this is the first scalable process that allows us to link assets directly to their nature and proximity of climate risks. In short, we move from the false signals to verified intelligence, and that basically changes everything as part of the foundations. Now, interestingly, now I want to move further ahead on more applications. Now, once the map is fixed, we can now move from compliance to actual competitive intelligence. I mentioned earlier about Basel III regulation, right? Or guidelines, which is turning into regulations by Basel Committee, which you see below as a logo, and various central banks like Reserve Bank of India, etc., are adopting this as part of the mandate. Right? These frameworks require banks to include climate risk and nature risks in terms of their capital adequacy, right? And to do that with GeoAI, you can actually run forward-looking portfolio models that go beyond just box ticking and actually can create competitive gains. And here is how it works. For one of our customers, which of course is a bank, hence, we extract and verify asset data and other data sets with AI. We overlay climate, biodiversity, supply chain risk layers, which you see as geospatial overlays, on top of it. And again, using AI, we run scenario simulations or analysis on what the future forecast would look like, considering climate patterns, forward looking metrics of corporates, and so on, regulatory trends. And this enables us to translate these asset data and corporate data into financial insights or financial metrics on what is the probability of default of this investment, what is the loss expectation, value at risk. And that goes down as part of the bottom line of and impacts the overall bottom line of the banks. And that then enables banks to create reportings for regulations and so on, right? Now, in other words, we bridge the gap between geospatial risk layers and the actual bank balance sheets. And because climate risk regulation is actually now going global, as you see the logos below, it is not just optional now. The institutions that get that right don't just meet compliance, but actually it's their strategic advantage by taking risks as part of their P&Ls, right? Now this is how you see how much valuable it is. And next, I'll show you how one of the world's, or actually world's largest sovereign wealth fund is using GeoAI to implement its investment allocation decisions. So here I'll talk about NBIM, which is Norway's pension fund, over $1.8 trillion in management, and its largest fund in the world. They are also an early adopter of TNFD, which I mentioned in the previous slide, and they worked with just to run portfolio-wide analysis down to their asset level. That meant putting hard numbers on natural capital impacts and identifying exposure to areas of, let's say, high water risks, and mapping assets which are close to biodiversity hotspots and so on. And for the first time, they could quantify these exposures in monetary terms and integrate them in both engagement decisions. And you see on the bottom right the kind of decisions and actions that NBIM took based on this analysis, which is at company level or engagement, portfolio level in terms of investment decisions, and even market level to support research and enable setting up standards. And NBM is now engaging with companies directly, asking them to disclose or report to actively manage these risks. And you might imagine that if world's largest sovereign fund moves like this, it is not just affecting their portfolio, it is changing the game for everyone. Yeah. Um, Now I'll hand it over to Anushriya to talk about how one or two more examples on how asset managers and corporates are using it. Over to Anushriya, you.
Thank you, Vineet. Building on the NBAM example we just saw, which showed how a sovereign wealth fund is adopting geospatial foresight, let me now take you to a more different level of how GeoAI is transforming both portfolio level and the company level decision making. So here is an example of a portfolio of a large portfolio side of a large European asset manager who wanted to understand their exposure to the nature related risk. And we analyzed the portfolio for the top EU firms and benchmarked it against the Nature Action 100 list of companies. The three key findings which are important and which stood out, the top three ones, are the first one is the performance highlight. If you see on the biodiversity impact side, around 42% of the lower biodiversity footprint is there as compared to the benchmark. And on the in impact intensity side, around 40% of the lower impact intensity is there across air, water, and land. Now, secondly, on the risk concentration sides, if you see, there are several sectors in that portfolio. The top two sector which was accounting to the major risk concentration was the manufacturing and the transportation. And there are around 19% of the manufacturing assets which are near the key protected areas, or I would say the biodiversity hotspot areas. And this shows that how the GeoAI can tell you at the ground level what are those locations, what are those assets which are in these huge hotspots areas. And the third level is your dwell risk. The example here is that the silicon leader industry, the industrial silicon leader, the REC Silicon, are facing both dwell risk, both from the water usage side and the exposure to the high water stress regions. And what's powerful here is that the analysis is went beyond the risk, not only the risk calculation, but on the mitigation side or on the positive opportunities sides. Using frameworks such as species threat abatement and the restoration star framework, the asset manager can identify the locations, the ground locations or the asset level locations for the positive opportunities purpose, and thus engaging it with the peer stakeholders, and thus enabling their path towards the nature positive alignment. Now, let me take you to the corporate side. Here is this is an example of a global pulp and paper player. Uh, Here we did an mean species abundance analysis. Since the global pulp and paper player or the paper sector is highly tightly linked to the land use change. So here what we did, we used the GloBioFoam model to map the mean species abundance across the six pressure drivers like land use, road disturbance, fragmentation, hunting, climate change, and the nitrogen nutritions. And we created a 300-meter resolution map. And if we talk about the findings, if you see the chart one, it shows that how the top two pressure drivers, which is your land use and your road disturbance, are the most influence pressure drivers for the mean species abundance on all these sites for that company. And if you see particularly the land use, the company's land use is around zero point 0.5 as compared to the overall country's average land use, which is around 0.67 or so. And why this is so? If you see the sector of this company, it's majorly tightly linked to the land use, and we could see that this land use intensity is the primary factor driving the mean species abundance or influencing that parameter. It could be largely due to the plantation or the conversion of those primary rainforest into secondary forest. And similarly, on the road disturbance side, the difference in the road disturbance MSA value as compared to country is primarily due to the road density or the increase of the road density on these primarily 3 to 4 sites across the Brazil country. And if you concentrate on the chart two, it not only the values of MSA at particular state and particular time, but we can do the time series analysis of that as well. So if you see how company is leveraging this MSA or the time series MSA and influencing their land management practices to give a positive biodiversity gain value. And thus, if you see on particularly on the site 2 and the site 4, there is a increase in the MSA values in the latest year as compared to the baseline of 2021. So, in short, the headline message in here is that your GeoAI is translating your broader financial portfolio all the way down to the operational decisions on the ground. Thank you. Over to you, Vineet.
Thanks, Anushriya. Now, these were the examples that we wanted to show you and real world applications on how GeoAI is being leveraged by not only investors, banks, corporates to make investment decisions and move the needle forward. But so next, I want to take a bit of step back in the next two slides for concluding. The first one is um, emphasizing something very important, right? AI is often considered as a silver bullet for everything, right? But the important thing here is Geo AI is all about augmenting AI with human expertise. And you can think of this way, like I show here in terms of the two intersection circles. AI brings data and speed. AI brings automation of routine analysis, forecasting risks, pinpointing, the hotspots, churning through the huge volumes of data, which is one of the problems which we saw. Uh, but human brings context and judgment, the ethical considerations and the nuances which are qualitative in nature and domain expertise and things like that, right? But each on its own has their own limits, right? Um, one such example was, an AI actually suggested in one of the analysis of closing down a polluting factory in one of the regions without even understanding that that is the only factory in around 200 or 300 square kilometer radius and gives the only employment opportunity for around 10,000 people in that area. But if you look at it from the context of that, you would make better decisions rather than just closing it and to transitioning it in a better way or something else, right? So together, humans and AI create this collaborative intelligence where decisions are not only faster, but they are defensible and smarter in nature. And that's why the best result comes in this collaborative intelligence and human AI partnership. Now, to conclude, let's zoom out and look at where the market really is. Yeah. Most institutions sit here, which you see on the left side, um, bit, maybe let me take a step back further. So here, what you see on the slide is how maturity in Geo AI leads to more and more value that can be delivered out of it. And you can go from being reactive on past things that have happened, diagnostic in nature to understand what has happened, to more predictive, actually prescriptive on what actions to take, and then even real time in terms of the prescription that you can give. But the most of the institutions right now are on the left side of this chart between reactive and diagnostic. They're still operating in a $100 trillion blind spot that we have started with and reacting after the fact and reporting what has already happened. Right? But with GeoAI, we can actually move the markets up the curve on the right side. We can be more predictive by making risks visible, as you saw with the examples, measurable and actionable with the Geo AI OS or operating system, which we talked about, and ultimately towards real-time prescriptive, where capitals can shift dynamically as the risk and opportunities emerge and change in the market. And I would like to emphasize that this is not a dream, right? Or this is not a future vision. It's actually already happening, and it's a reality. And just OS or just Geo AI OS, which you saw earlier, has built tools to do this today. With a click of a button, your portfolio can be analyzed against nature and climate risks. And hence, I want to leave us with this final question. What if every investment could see its hidden nature and climate risk? And now with Geo AI, it can. And that's the foundation of a nature positive economy. Thanks a lot, everyone, for listening to us. Please feel free to get in touch, and we would be happy to elaborate further, answer questions, and even help and partner in these topics.